Hello, I'm Doran McDermott and you're watching Dukascopy TV. The Swiss National Bank maintained its exchange rate today. Even though this was widely expected, the central bank statement curbed trader enthusiasm for the franc. I'm joined by Arturo Bris, Professor of Finance at IMD in Lausanne. So what were your thoughts on the comments made in terms of the exchange rate, and do you think the SNB is taking the correct actions?
I think that the intervention is by itself happening by the central bank already disclosing or announcing its intent to keep the 1.2 exchange rate. So having said that, I think that the problem that Switzerland is confronted with in the current times is that the international environment is such that there are low interest rates everywhere. Then all countries and governments are lowering interest rates, and in that situation, then the Swiss franc is under a lot of pressure. So I think that the Swiss National Bank is doing the right thing, is putting pressure into markets by making credible statements. So the parity of the exchange rate versus the other currencies is maintained. I think the announcements today, I think, are in line with anybody could have expected.
The SNB maintained its September forecast for growth, believing it will grow between 1.5% to 2%. Now, do you agree with this forecast?
Well, certainly the problem with the Swiss economy is that it's heavily exposed to the European economy. I mean, as we know, Switzerland is an exporting economy, and Switzerland massively exports or mostly exports to European countries and especially in the euro area. About 40 to 50% of Swiss exports go to the euro area. The growth prospects for the Swiss economy, I think that they are constrained by what happens in the rest of Europe. So I agree with the forecast because I think to the extent that we are not going to see much growth in countries like France or Germany in the coming years, then the Swiss economy will suffer the impact as well. I mean, in any case, 1.5% to 2% is not bad if you take into account the prospects for many economies around the world, developed and emerging. So they are not bad numbers.
The central bank also revealed it sees prices falling 0.2% this year. However, it sees a pickup in inflation next year, reaching 0.2% and 0.6% in 2015. So, what do you think?
For international standards, this is a mild inflation, I would say. And obviously, if we're going to end up with a deflationary year, this cannot continue forever. Switzerland can never become Japan. So I think it's, in that sense, it's a good way by the Swiss National Bank to shape expectations, to announce inflation targets or rates of 0.2 to or 0.6. Seems natural, and I don't see another couple of years where inflation is going to be so low as we have had in 2012 and 2013.
And finally, Arturo, what else will you be closely monitoring, and what are your major concerns for the Swiss economy for next year?
Well, that's interesting how, if you look at the macro variables, obviously the stability or the volatility of the exchange rate is certainly the major concern regarding the Swiss economy. But besides that, I think there are two concerns that I have. One is basically what is going to happen to the banking system. The relationship with the U.S., the Department of Justice decisions, the way the Swiss banking sector is going to deal with the new regulations is going to be quite problematic for those institutions. I mean, we're going to have institutions that are going to suffer a lot. We're going to have a lot of integration and concentration of Swiss banks, and it looks an interesting year because there's going to be a lot of action there. Obviously, being Switzerland a country where banking is important, I mean, it's not essential, but it's important, amounts to 10% of GDP. I think it is a serious consideration. So we need to pay a lot of attention to the banking sector. Second, and more generally speaking, I'm quite concerned about the social pressure that we have been witnessing, especially in the last year, regarding income inequality, salaries, income distribution. I think it's quite interesting that the whole process that has been taking place in the last years, because it was not expected from a ultra-capitalistic society or economy like the Swiss economy. So what is going to be the outcome of all of these social tensions is very uncertain. We have seen the 12-1 initiative that was voted out a few weeks ago, but we're going to see more initiatives coming and being put forth. I think this all reveals a sentiment among the Swiss population that is detrimental for business. And we will ultimately need to find a social compromise between preserving social justice and then preserving an economic system that has proven extremely successful. So I think these are the two problems that I'm mostly concerned with.
Thank you very much for joining us today. Well, viewers, do stay tuned as we have plenty more coming your way.